Welcome back, everyone. The next presentation is going to be from Nick Blitterswake, CEO from UGE International, which trades on the OTCQB under the symbol UGEIF and is also traded on the TSWX. So if
I assume I just go one over in my presentation to there. All right, perfect. All right, thank you, Charlie, and thanks everyone for being here, both in person and online. So UGE, like Charlie just mentioned, we're traded on the TSXV and also on the OTCQB. If I just go through like at a high level what we do, we are a developer of solar and energy storage projects, more on the solar side than energy storage, although energy storage has really been growing quickly here in the last couple of years. Really believe we're in the sweet spot for this overall industry in terms of our project size and our approach to developing these types of projects. I think a lot of you would know that solar and renewable energy as a whole is growing incredibly quickly. In the last couple of years, it's been more than 50% of all new energy capacity being built out in the US, for example. Within that, though, the biggest impediment to growth is the interconnection timelines of projects. Being more focused on these mid-scale projects like we are, those projects move more quickly, and think that gives us a better ability to scale and do more over time here. We also have a full life cycle approach to what we do, in that we originate our projects, develop, engineer, build them out, project finance them, and then own and operate them. And that also gives us higher returns, higher cash flow profile, and a bigger overall impact as well. We're dual headquartered New York and Toronto. So myself and Sabrina are both based here in the New York area, and we do projects across the U.S. So it's really a U.S. development focused company. We're a team of about 65 or so with a few extra on there for consultants. We've completed over 750 projects over our lifetime, which totals over 500 megawatts of experience. So we're in the right place, right time. Really feel like we have a good platform and a good team in place to take advantage of the tailwinds that are in our industry right now. In particular, the Inflation Reduction Act, which is now a year and a quarter in. The Inflation Reduction Act has a lot of targeted incentives directly to the types of projects that we do. So projects that are mid-scale on things like landfills and what have you, projects that benefit low and moderate income communities, et cetera, et cetera. So the Inflation Reduction Act, kind of one of the main pillars of it is the investment tax credit, which as a baseline provides a 30% tax credit to our types of projects. But there's a lot of adders in addition to that that can bring that number hypothetically all the way up to 70%, 70, which is really, really significant for providing a really good economic return on these types of projects. Like mentioned, we do trade on the TSXV. We are, as we go through this, I think keep some of these numbers in mind in terms of market cap versus the value of the projects that we're developing. We came off a bit after our Q3s, or leading into and after our Q3s here in the last couple of weeks. As of right now, I think our US market cap is just a little bit over 20 million USD. We currently have like contracts to develop projects in the 3 billion USD type of fair market value range. We report different stages within that backlog, or within that pipeline, sorry. The more advanced stuff that we call our backlog, that in itself is about $1 billion USD worth of fair market value of our project. So I feel there's an incredible amount of upside as we execute on our business plan here. It's also very tightly held. We insiders own about 33% of the shares. We've been frequent buyers over the months and years that we've been a public company here. So I talked about being a full lifecycle developer. That's a bit unique within our industry. There's a lot of like developers that develop and then flip out of projects. There's builders of projects. There's funds and so on that like to buy and own projects in our space. In the mid-scale space that we're in, it's our hypothesis that being a full lifecycle developer allows us to have a bigger impact for many different reasons, but it's a lot more efficient for the clients and the landowners and the rooftop owners that we work with. So it's more efficient, less margin stacking and so on, and we're able to do projects more quickly and capture more of that value as well. I mentioned we have a really strong team. I'm not going to go through all the detail in the interest of time here, but this presentation is on our website, and I think if you take the time to read through the profiles, you'll come away very impressed as well. The team's really in place to more or less develop and execute on about 100 megawatts of projects per year. And we'll go through what that means for numbers here in a little bit. But yeah, the structure is in place and we're just heads down on executing on that. This full life cycle approach to what we do, really feel like it allows us to play the best of both worlds. So on the one hand, on the green side here, as a developer that's originating these projects ourselves, as we bring them forth, as we finance them, we take out what we call a developer surplus. So from a cash flow perspective, it's kind of like we're developing and selling the projects in that we have that cash back to the company. And I will go through that more here shortly as well, because it's an important part of the story. But then also building up this long-term portfolio of recurring revenue over 20, 30, 40 years, depending on the project, allows us to build this really safe long-term profile for the company. Our recurring revenue, we're averaging about 90% gross margins on that recurring revenue. And so as this scales, really excited for what this means for the long-term economic returns for the company. So the backlog that I mentioned, that's about 1/3 of our total like kind of site control contracts we have to develop projects, but the backlog is the more advanced stages within that. Just to go through like how this works, we when we're developing these projects, which takes, as it says here, 2 to 3 years, the investment is pretty minimal in terms of 3 to 10 cents per watt on average. But as those projects finish their development cycle, there's a milestone called NTP, or Notice to Proceed. We get those projects financed, we build them out, and then we start owning and operating them. The developer surplus, we're targeting an average of 40 cents per watt. And then the recurring revenue is looking like about 21, 22 cents per watt per year over that 25 to 40 year life cycle. So if you apply that to our current backlog, you would look at a developer surplus of about 137 million USD, and then recurring revenue of 72 million USD. Of course, we're always adding new projects. Our origination team's out there finding new projects every week, but that as a baseline. Just remind us, I mean, that developer surplus right there alone is 6 or 7 times our current market cap, never mind the recurring revenue, which is 3.5 times the market cap. So as you can tell, I think we're incredibly undervalued right now. As the backlog is built out, you see how that revenue profile stacks up. The green is our recurring revenue, and then the grayish blue is the gross margin on that. So you see how, as long as we just keep our heads down here, even the 100 megawatt mark, which is a kind of a short to medium term goal of ours, even that, the recurring revenue and gross margins would be higher than our current market cap just on the first 100 megawatts. Over the last several years, so one aspect to the story is that the IPP side of the business, where we've been financing and holding on to our assets, is really something we just pivoted to over the last few years, and now seeing that portfolio mature and these projects drop out from the other end. Since we announced that pivot in 2020, each year we've put out goals for what our growth will be in terms of the backlog growth each year, and each year we've exceeded that growth. So you see that stairway up and to the right. There's a tremendous amount of opportunity in the space. I think like if you follow the overall space in the public markets, you might be even surprised to hear that based on how solar stocks have done this year. But in the industry, there's as much opportunity, if not more, as there ever has been. And so we're really excited about just continuing to see this growth play out over time. I was in New York when I started the company. I'm Canadian, which is partly how it leads to us being first listed in Canada. I was in the New York area when I started it, so kind of broadly the Northeast has been a traditional hotbed for us. Community solar has been growing really quickly. That's actually, as we'll see, a really significant portion of our backlog right now, about 80% or so. Community solar has been growing across the country, and as it has been, we've been growing across the country as well. I think you'll see additional states, especially in like the Midwest and Southwest, be colored in here in the quarters and years to come. So we have this really big pipeline. I've thrown out numbers already on how big that is. The numbers, I think, when Sabrina and I are telling the story, it kind of feels silly sometimes, to be honest, versus the market cap. So, but what we're really focused on right now is we have this massive pipeline. It will continue to grow, but we're really focused on bringing those projects through to operating status, seeing that operating portfolio scale up, see the cash flow profile of the company really change as that happens. So 2023 has actually been like a really fantastic year for this happening. Our assets that have hit NTP, it's funny. It's okay. I have to look back here, but about 16 times, I think what they were at the beginning of the year. So we've seen that scale up really significantly, and we're consistently every quarter now having projects hit NTP, and then once they hit NTP, it's just a matter of building it out. In case that's not clear, that's kind of seen as kind of like the bread and butter or easy part, commodity part of getting these projects into the operating portfolio. So it's mostly just a matter of time. The operating portfolio, by the end of this month, we're expecting it to be very close to 3 times what it was at the beginning of this year. So including a few projects that either are or will be completed within Q4 here. So it's been a really good year for us scaling up, and looking forward to 2024 continuing down that path. In terms of a few examples, just to put a little bit of meat on the bone here in terms of the types of stuff that we do. So here's 3 examples. This one is in Westchester County, New York, so just north of the city within the Con Edison service territory. That's important because Con Edison, people that live here, you pay a lot for electricity. This project goes on the rooftop of these buildings. Anybody can subscribe to a community solar project. You get at least a 10% discount off your bill. So you're buying credits for clean energy, a discount to your bill. It's really a win-win. The building itself gets a lease payment for your rooftop. As you'll see, we also do ground mount projects as well. So it's kind of a win-win-win for everybody involved. Clean energy, cheaper energy, lease payments for your roof or land. And that's why we and the industry are growing so quickly, is because the economics make so much sense. As I was on the subway this morning, I was reading E&Y came out with a report just yesterday saying that solar is 28% cheaper than any fossil fuel, than the cheapest fossil fuel source, which I guess would be natural gas right now. It's why solar is really the energy source of now and the future, certainly in my opinion. This project here is in Maine, so Norway, Maine, not over in Europe. This project was a capped landfill in this town in Maine. We put a solar system on the landfill. People within the town buy energy from the system. Same construct, clean energy, cheaper energy, no risk. And then also, because on a landfill, we get an additional ITC adder. So we get a 40% tax credit from the government for developing this project. The Inflation Reduction Act set that construct for the ITC in place for a minimum of 10 years, automatically extending if carbon emissions haven't dropped by, I think it's 70% by the end of the 10 years. Unless there's, unless there's a miracle, that's not going to happen. So this ITC framework is in place for a very long time. If you're thinking to yourself, what if Trump wins? Trump extended the ITC when he was in office, as did, it was actually put in place by George Bush originally. So I think like the ITC aspect of this should be pretty strong. Last example here, this is a field house. This one actually is also in Maine. So this is another rooftop, but another community solar project. And, if you go through our website, there's a lot of case studies of the types of projects that we do. Across the overall backlog, so the biggest portion of the solar projects are community solar. So way to think about community solar, I'll go through it in more detail in a second. One project serves many off-takers. Battery storage is increasing really quickly right now. We have a growing slice of the pie there as well. One of my favorite stats right now, there was more battery storage installed in 2022 in the US than new fossil fuel capacity. So like the inflection point for battery storage has happened, and we're playing a role there. And then lastly, PPAs. So this would be a one-to-one arrangement. We have some projects that are directly servicing a city or a town or a building, but it's, as you can see, a much smaller slice of the pie. Because community solar is so much of the pie, I just want to go into a little bit more detail here. One number to keep in mind is that somewhere in the neighborhood of 80% of households can't install solar themselves because they live in an apartment or a condo, or they rent, or whatever the case may be. Community solar allows us to install a centralized project, divvy up that energy to households that subscribe to the energy. They buy, as I've said, that energy at a discount. They use energy like they always have. But they get clean energy at a discount. It's also really well tailored to like low and moderate income communities, disadvantaged communities, people who can't afford solar when you think about that housing profile that I mentioned, which is why it has good regulatory and government support and why we've seen this grow so much across the country in recent years. So from an impact perspective, it makes it does really well. But also because of the Inflation Reduction Act, because we're selling this energy at retail rates as opposed to wholesale rates, the economics of community solar is really, really strong as well. We are an impact-driven company. We put out an annual ESG report. Next one will be with our year-end financials in March. The full report's on the website for anyone who's interested, or of course contact Sabrina or myself. We have 3 analysts that cover the stock right now, 2 in Canada, 1 in the US. Average target is 2.5 to 3 times where we're trading right now. Anybody who'd like to be put in touch with the analysts or see the reports, you can also just let me know. And then I think lastly is we, because we have this large portfolio, we pledge these projects as security for what we call a green bond. We've been in the market for these about every 3 or 4 months. We just passed our 5-year anniversary from the first time that we did that, or issued our first one. In the kind of current market environment, we've been issuing these bonds, again, secured bonds, 150% coverage ratio with a 9% coupon. So it's something that we've seen interest from individuals and high net worths up to university endowments, foundations, energy funds, and what have you. So we've had good success with that over time. Going back to the public market side of things, it's also allowed us to fund the development of these projects. We haven't raised equity in about 3 years and have no plans to. So with that, happy to take any Q&A. I should have mentioned off the top, I'm the founder and CEO of the company. Sabrina works with us. We put capital work across the entire chain from the corporate side to the project side, and so Sabrina works on a lot of that. And then Stephanie, our CFO, is based up in Toronto. So again, thank you, and any questions, happy to take them.
Nick, thank you. Does anyone have any questions from the audience? Not any questions from the virtual?
So, Nick, we have a question here from the online audience. How much capital do you need to raise over the next 12 months to execute your development plan and cover the burn rate?
Yeah, so I think it's really important to work backwards from the project side. So like on the project side, we work with banks and in essence, institutional funds who buy these tax credits. So in the next year, I'm just sort of spitballing, but that number is in the north of $50 million USD range into the projects. That's the least of our concerns, frankly. We have really good relationships there. We've closed multiple transactions in that space in 2023 and are I think, well placed for 2024 as well. And then working backward from there, the green bonds we issued, I think it was 3 green bonds in 2023, probably aim to do a similar number next year, which will fund the development of these projects, which includes the overhead that we put into that. So, just doing some quick mental math in my mind, I think this year we raised north of 10 million USD in green bonds. I think with the growing portfolio, probably for 2024, we'll look for, probably north of $15 million on that side of things.
Along those lines, somebody's asking what your cash position is.
So we just announced our Q3s last week, and the cash position was 3.5 million USD, and we've closed a green bond since then as well. So that's in the neighborhood of where that would be. I should say, the developer surplus aspect of the company, I think, is missed by a lot of people. So just to kind of reiterate that again, as we're building out these projects, even before they start operating, we in essence pay ourselves back out of the proceeds of funding these projects, including the tax credit, this developer surplus. So the income statement really doesn't paint the right picture of the cash flow profile for the company. It's important to look at the cash flow profile for that reason.
And we have an attendee who would like to develop a community solar project in British Columbia and asking what your bandwidth is for Canadian projects.
So I'll say that community solar right now is active in, I think last I counted, 22 states. I know that there's a few states that are in the process of passing legislation now. So that number could have grown, certainly will grow here shortly. It's not something that you can do just anywhere. In Canada, Nova Scotia is the one province that had a pilot program for it. So strictly for community solar, it's not so easy to say, okay, British Columbia, here we come. I'm from British Columbia, so I'd love nothing more than to do projects there. I would welcome, I know our contact information's up on the page here. I'd welcome that individual to contact me, and I can put him or her in the right, in contact with the right people.
Another investor's asking about your backlog, and if your backlog is greater than your current market cap, are you considering buybacks, stock buybacks?
Yeah. This has actually been a topic of conversation here recently, and the short answer is yes. I think that I've mentioned multiple times how tremendously undervalued we believe we are. I think that over the short, medium, and long term, I think there's a lot of reason for us to consider. I mean, on an earlier slide, we looked at a developer surplus across our backlog, which was 6 or 7 times our market cap. I think that tells you that a good place for us to invest would be in our own equity. So it's certainly a consideration. We want to make sure that we're doing that at the right time, and what have you. So I don't want to promise any sort of time frame on that, but yeah, it's a major consideration.
And this one pains me just a little bit, but they're asking, when do you planning to uplist the NASDAQ?
And being here at an OTC event, it's a good question. It's been part of our medium-term plan for sure. I think we've been scaling as a company quite significantly. We have a certain size range in mind that we'd like to get to before we execute on that plan. I think we've seen ourselves growing really quickly here. So I don't know if that's 1 year or 3 year or exactly when that is, but it's certainly something we plan to do as we scale.